Hi, this is Chris Moore and welcome to your December real estate market update. It's the season to be market savvy. I'm just kidding, of course. It's always a good time to be market savvy. So let's jump into the numbers. It's still a time in the market where we want to look at what is the rate or what's the speed of the market, what kind of leverage is in the market between buyers versus sellers and so forth. And so the main three indicators that we've been looking at recently is inventory, days on market, and list to sale price ratio. We ended November with a 3-month supply. This is pretty much the same as October, and this really is pretty normal for the Oklahoma City market when you're measuring all price ranges within the market. And this was a pretty normal amount of where the market would shift one way or the other. So that's kind of like the fulcrum, 3-month inventory. If it's higher than that, then things are taking a little longer to sell. If it's lower than that, then sellers might have more leverage in the market. But pre-pandemic, a 3-month inventory was something that was really normal and a pretty average amount of inventory that we would see out there. The average days on market right now in Oklahoma City is at 31 days. And the houses that are selling more quickly are at about 12 days. This compares to the market peak back in June at about double the numbers. There's really no change in this from last month though, so we're definitely seeing a normalization or a stability as far as the speed of the market. Next, let's look at list to sale price ratio. This is a great number to use to measure the entire market or even smaller segments down to one school area or one neighborhood. Right now, across Oklahoma City, the average days on market is at 98%. This is a really normal number for our market, and 98% was a very average number that we saw from about 2013 all the way through 2019, everything up to the pandemic. Very normal as far as list to sale price ratio. If you compare that to hotter areas in the market, this past year we saw 106%, even slightly higher than that in some specialty areas. The average, comparing back to the peak this last June, was 102%, so now down to 98%. Another way to say that is, in the market, on average, there's about a 2% negotiating margin, and we didn't have that earlier in the year. So for November numbers, something else really stood out to me. The number of contracts in November was down significantly year over year, about 31%. So this past November, we had 1,550 new contracts. Last November, we had 2,240 new contracts. So this does show the shift in the market that folks have been anticipating. However, most of the lenders and most of the agents, including myself, are anticipating that the market's going to pick up significantly right into the first quarter as we get into next year. So stay tuned and we'll see how it goes. Thanks for joining us for today's market update, and be sure and catch us next time as we take the market and break it down.